The market is racing up today with the NASDAQ up 3.3%, with crypto up a little bit as well, Bitcoin up 2%. Why is this happening? And I want to talk to you about a stock or a crypto, I'm not going to tell you which yet, that I have been piling in six figures into this year. Now, I said in the title, I just put it in. I'll be honest, I've been putting in all year, but it's so historically cheap. I actually bought more of it last week than I typically do, just because, again, it's at such a good value. I will give a trigger warning right now because this is a very divisive asset. I will put timestamps underneath the video in case you want to skip just to that section if you're watching this at some point in the future. Now, I want to talk to you about all this, including why the market's up today, some big events happening here soon. Please stay through to the end because there's so much information we're going to cover, and I'm going to try to keep it nice and short for you. If you don't mind hitting the subscribe button so you see future videos, that'd be fantastic. It's right underneath the video. And then also check out moomoo underneath the video. They're giving you some free stocks. If you want to put in $100, you'll get 5 free stocks. If you put in $2,000, if you have some extra, a couple $1,000 extra just sitting around, and you want 15 free stocks, you can use the link underneath the video as well. I would highly suggest it. It's kind of like Webull, but they're giving you tons of free stocks for signing up and depositing. So check it out underneath the video. So this is a giant week for the stock market. We have a couple big banks announcing earnings here today. We had a lot of big banks announcing earnings last week, which were pretty good. We had Netflix tomorrow announcing earnings, Tesla on Wednesday, Snapchat on Thursday. We can kind of see in the advertising business, maybe extrapolate and see what Facebook or Google or Amazon is going to announce in terms of their advertising. We have American Express on Friday, really looking into the consumer. What are they spending money on? And then next week, we have the major tech companies announcing earnings. This is really what's going to move the market with Apple, Amazon, Google, these kinds of companies announcing what they did in Q3. So might be a little bit of a surprise for a lot of people if they actually had pretty good earnings because so many people are worried about the recession that we're in right now. After next week, we have the Fed's next FOMC meeting announcing how much they're raising rates. Then the week after that, we have CPI. So I would not check out for the next month because there are so many big events happening. We really have to stay on our toes right now. Now, with that in mind, the market is moving up. After we hit lows last week, historic lows, 52-week lows, we have gone up 3.3% on the NASDAQ today. Crypto's up pretty significantly too, and this is really due to one thing specifically, I think, which is the UK. They went, and if you remember, I'm going to try to keep this short, but we could probably make a full video. A couple weeks ago, we had the UK announcing that they're going to have some tax cuts. They were going to do other things that would stimulate the economy. And it caused a lot of fear in the market because they already have such high inflation. They're worried that if they continue to stimulate, the inflation is going to go higher. Then they're just going to have to raise rates into oblivion, basically. So they had a huge sell-off in UK bonds because here in the US, we already have pretty high yields and there's less worry that we're going to have to raise rates so aggressively in the future. So that means the prices are probably going to stay pretty high because eventually we're actually expecting cuts probably next year in terms of interest rates. So the prices are going to be high. You're going to get higher yields here. So why would you invest in lower yields where you expect the prices to go down over in the UK? So we had a huge sell-off in the bond market, which caused a lot of pension plans to potentially go belly up because they were using leverage. So the Bank of England stepped in, said that they were going to do unlimited bond purchases, but they would buy them at market value. So a lot of these big pension plans didn't sell as many bonds as they were hoping to. So the UK set aside about $100 billion worth of money to buy back these bonds, and they only had about 19 million that they had to buy, and they cut it off last Friday. So many people were worried that this is going to cause a drop in the market and cause them basically to go, these pension plans to go belly up and just have a domino effect affecting UK's economy. Now, what happened was they went today and they pretty much canceled all those stimulatory actions that they're going to have that caused the price of the bonds to sell off so much. So their currency went up because people are less worried that they're basically going to have huge inflation. Then their bond prices went up, which increased liquidity for the pension plans, and the yields went down pretty significantly as well. So all this happened today, and this is causing the US market to go up as well because With the British pound going up, that means the DXY fell because the dollar index, or DXY, is basically how strong the dollar is compared to other currencies. If other currencies are going up in value, that means the DXY is going down in comparison. So that caused the US markets to go up as well. So right now it seems like crisis has been averted, at least for the short term. Now, of course, we've seen in the last couple of weeks even huge green days followed by huge red days. So I wouldn't just go all into the market or anything like that if you have been keeping some cash around just in case of a rainy day. But I think this is good news. This is a little bit of fear being pushed aside that the UK is not going to crumble, at least here very soon. Now, I want to talk to you about what I just put six figures into, but first we do have the digital asset fund flows report coming over from CoinShares, and we look at this every week because it shows what investors are doing, what big investors are doing. You can see we have another week of inflows, but it's a little bit mixed because this week we have about 8.8 million going into Bitcoin. We do have 3.9 million coming out of Ethereum, a little bit going into multi-asset and Binance, but a significant amount going into short Bitcoin as well, almost as much as what's going into Bitcoin, 6.7 million. So we do have 12.2 million inflows, but some of it is betting against Bitcoin as well. So it's kind of a mixed week in terms of inflows. We also have an interesting chart here. Bitcoin's production floor is rising, currently at 17,000. At what other times do we see a similar rise in cost basis? If you look here, we had seen cost basis fall and then it started to go up a little bit, and then the price of Bitcoin spiked. Now, this isn't perfect all the time, but typically it is a good sign when the cost of production is near the cost of Bitcoin. And we've been so steady here at 19,000. It's amazing to watch how steady Bitcoin's been, with it actually being less volatile than the major US indexes. So a lot of people worried about how risky Bitcoin is. This is typically a good time to be buying Bitcoin, especially with what I announced earlier. I think it was just on Friday. The fact that they are changing how taxes are being reported for digital assets. I think there might be some big companies that are nibbling on Bitcoin right now. And I could always be wrong, but pay attention to this over the next quarter. I want to talk to you about the asset that I feel like is so cheap historically, and it's one that you've probably heard of. It's Tesla. And Tesla's up nearly 8%. Don't be thrown off by this because it's still historically cheap. If you were in the Patreon last week, Friday, you would have noticed I made an extra buy. I dollar cost average, but I made an extra buy to buy Tesla because it fell down so low. It was near a 1.5 year low on Tesla stock, which is just insane in my opinion. It was really where so much fear hit the market and people were just throwing out whatever they were holding on to. When you look at Tesla, and again, I realize you've probably heard this before, but you might not have internalized it and really thought about the opportunity in front of us. Don't think about the robots right now. Don't think about full self-driving. Just look at their car business, because those I think will happen, but I just want to keep it really simple here. Now, analysts are expecting $4.26 in EPS this year. Now, this gives them a forward PE of 48. When you look at next year, they're expecting $5.85, which is a forward PE of 35. We really never get to this level. I think it was 2019 the last time we got to this forward PE. When you look at this, though, this is only a 37% growth rate. I realize that's really high for most companies, but for Tesla, I don't think it is, because they're ramping up two different facilities, which Elon said are basically burning money right now. And they also have EV credits or tax credits coming in for next year that should be pretty significant. I think they're going to either just continue the demand that they have for Teslas because they're going to be able to give back so much money to buyers, or they're also going to be able to raise their prices a little bit and hit even higher margins. And their goal is to hit 50% revenue growth a year or 50% delivery growth a year. If they hit that, their EPS should go up by more than that because of economies of scale, because as they go along, more is just going to hit their bottom line. So I would expect this to be closer to 6.5, 7. And they're really not expecting much growth next year. When you look at this, Q4, $1.33, $1.34 in Q1, $1.39 in Q2. This is barely any growth. When you look historically, every quarter except for this last quarter of about the last 10 quarters, they've been growing EPS every single quarter and pretty significantly. I mean, we're talking about 20% jumps in earnings per share over the last 4 or 5 quarters before this last quarter where they had shutdowns in Shanghai. I would expect more growth in this next year. So we're talking about forward P of probably 30, even if you go by the analyst estimates of 35. that's still really cheap compared to what they typically have in terms of forward PE. Now, I realize it's still more expensive than some other companies, but the fact is they still have those other avenues of making money that I talked about earlier. Whether you're talking about insurance, full self-driving, robots, those are kind of like call options. If they just get one of them that really hits, the fact is that's going to help their bottom line so much. And it's another huge growth avenue. And even if it takes years and years and years to build out, the fact is analysts will start pricing that in when it's a little bit closer to actually coming. So you might see their forward PE go up pretty significantly because now instead of expecting 50% growth for, let's say, 2 years into the future or 40%, 30%, maybe they expect growth in earnings per share to go up for 5 or 10 years into the future as they're ramping up this other type of their business. So you might see them go back up to a 50 forward PE, a 60 forward PE, 70 forward PE like they have been historically. So I would expect a pretty good earnings from them on Wednesday. And I think this is just so historically cheap. And when we're looking at a forward PE of 30 at 35, that is getting closer to some of these big tech companies, right? With like Microsoft at a 22, 24, 25. They're a totally different company. But the fact is you're getting into not just high growth categories, valuations, but you're getting into almost value territory for a company that's growing so quickly and so consistently. And they're still at such a low production rate compared to some other companies. I mean, we're talking about 1.4 million, 1.5 million this year. And you compare this to some other car companies, they're at 5 million already. Tesla's expecting to be at 20 million by 2030. But even if they just get to 10 or 15 million, we're talking about such great profitability, just 7 or 8 years in the future. Now, I realize that this is going to be very divisive. A lot of people are going to hate this stock. A lot of people seem to hate this stock. I don't know if it's because they feel like they missed out on it and it's too late, or because they just think it's too richly valued. But when you look at some of these numbers, it is getting historically very cheap. But listen to this too. With the earnings coming up, the earnings season, so many people are worried that we're in recession or we're heading into recession. What happens if we really do get this 37% growth over the next year? So many other companies will have no way of competing against this. If people are looking for some company that is earning a significant amount more in 2023 than 2022, there's going to be a short list if we really do hit a hard recession. I still think Tesla will be able to sell vehicles with everything that we talked about earlier. And even if they grow 37%, a lot of analysts and a lot of investors are going to be looking at this thinking, wow, if they can grow earnings 37% in a recession, they have a great balance sheet. They're still continuing to grow in the future. Who else can compete with that? No one. So they might start investing more into Tesla because they're one of the only companies that can grow pretty significantly, even facing this kind of turbulence that we're at right now. So I bought a significant amount last week at $206 or $208. I will continue to buy. I'll probably buy tomorrow, even though they're up 8% today. This is still very low historically. Check out moomoo underneath the video to get some free stocks, and check out this video on the end screen about some huge news for crypto investors.